let's start off by talking about what is a bit of a surprising disappointment, shall we say, from Titan, because the street is not used to seeing this kind of a stock reaction after a quarterly report card from the jewellery maker. But the sparkle has surely come off, and it's perhaps got to do with the fact that Titan is talking about more competition in the market. In fact, let's see if we can go across to Mangalam to first talk about the numbers and where the miss was, and then we'll talk about the key highlights from our management conversation as well. Mangalam, over to you.
Well, so for Titan, the thing was that revenue growth was never a question because there is demand for jewellery. We've seen that in the likes of other players, etc. as well. And the company had given us the fourth quarter update where the overall revenue grew by about 20% odd. So there wasn't any concern out there. The top line was absolutely fine. But at what cost is that revenue coming? That's coming at the cost of margins, because the company's EBITDA this time around came in at 1,100 crores as against street expectations of 1,250 crores. Margins a little shy of 10% on an overall basis. Jewellery as well, if you account for, the ex-bullion sales that they've done, the margins were 12%, lower end of the 12 to 13% guidance that they've given. And at the same time, we saw watches margins come off by about 300 basis points as well. There are a couple of reasons why, the margins were lower. One, the company said that volatility in gold prices, the sudden increase that we saw, led to the people go ahead and postpone their purchases. Secondly, people are looking at more gold products than, diamond products, etc. That explains why the studded ratio is still at 33%. They have a 7% market share in jewellery, which they're gunning for about 10% in the next couple of years. But at the same time, competitive intensity is extremely high as well. They said large local players and, some of these new age entrants in the market as well are increasing their presence, and that's reducing the margins that are available for everyone in the industry. So if you look at the growth that has been posted by the likes of Kalyan, Senco, all of them have been obviously on a much smaller base, much higher than Titan as well, because they are looking to expand beyond their geographies or expand deeper into their existing geographies itself. And the third larger mega trend, which may have Titan worried going forward, is the way lab-grown diamonds are. So currently it's seen an impact in the US, not as much in Europe, and in India, very limited, but this is something that the company is definitely keeping an eye out on. In terms of what the management had to say to us, it was important that gross margins, they believe, are likely to be modest going forward because of higher competitive intensity and gold price volatility. Margins are limited. In fact, not just this year, for the next couple of years, they see margins around 12%, which too is at the lower end of their 12 to 13% sort of guidance. They're keeping a close watch on the development of lab-grown diamonds, which is impacting, as of now, large carat diamonds. But whether that comes back to India and lower diamonds as well is something we'll be watching out for. And they are not very hopeful of increasing their studded ratio going forward as well, because more as gold prices rises, more customers are looking at plain gold jewellery or gold bullion itself, which is basically a less margin product for the company.
Okay, and it doesn't help that the stock is trading at 60 times forward valuation multiple, according to some estimates. Thank you very much, Mangalam, for comprehensively explaining that competition hurting the margins. Earlier today, we spoke to Ashok Sonthalia, CFO of Titan. Listen in.
As far as jewellery margin is concerned, yes, two factors: gold price volatility and actually spiking a lot during the year, almost 18 to 20% as of now. Gold prices have gone up, and the competitive intensity that we talked about. The existing jewelers are expanding aggressively. Many new players are coming in, and a lot of retail capacity has got created. And I'm sure demand, because of the gold price volatility, also is slightly slower to catch up. And whenever gold prices are volatile, consumer sentiment do get a bit beating till it stabilizes. So both these factors, I think, contributed. We wanted to prioritize our market gain share, the acquisition of new customers, over margin, and a lot of consumer offers and gold exchange programs were there during the quarter, which took some beating on the margin. As far as margin is concerned, I do expect that this competitive intensity would stay for 12 to 18 months for sure, before some of the weaker players or some of the other players from where we are gaining the market share either exit or become further weak. 12 to 13%, I believe going forward, margin is going to gravitate more towards 12%. So the center of gravity is about 12% for next 1 to 2 years.
Okay, that is Titan down 6.5%. But